How to construct an ETF portfolio. This is an easy but comprehensive ETF portfolio tool. The idea here is that you like to own the entire market, but like to adjust the ratio of ownership depending on what you believe to be the strength of various world economies. A diversified world portfolio includes the US equities, the developed world excluding US, the emerging market, the countries that have a growth rates higher than the developed world, and you may also want to get exposure to certain countries that you believe it's not well represented in the other ETFs, like China. And don't forget about bonds. Depending on your risk profile, it is always good to have a less or more bonds in your portfolio. So imagine your total investment is 100,000 USD, and you can choose the tickers of ETFs that you like to do. And then the price you can easily get from the Google Finance in your Google Sheet. And then you can choose your allocation percentage. To choose the allocation percentage, again, that's all to your risk profile and your opinion on the world and the world economy. In this case, we have here 60% to the US, 15% to Europe and Japan, and emerging market 12%, China 3%, and then we have 10% bond, 90% equity. Then it calculates, the share calculates how much share you need to buy depending on the price, and then allocation would be just the shares multiplied by the price, and that would be your total. That's kind of round to around $100,000. Then as you go to your brokerage and you buy each of these items, then you add the number. So at the beginning, positions are 0. Then you go and buy each of these ETFs accordingly. You populate them, and you expect that your positions to match your allocation. And then after a while, you would rebalance it. For more tips on how to choose an ETF and how to rebalance your portfolio, press the plus button so you're in the loop.